Hello, Matthew Copley with Copley Financial Group. Today we're going to do a market update. It's not been too long since we did the last one, but there's been a major change that has taken place that I want you to be aware of, that most people don't understand. They're not talking about it, but it's a huge deal. And that change happened yesterday, and this is what I expected. It happened actually a little bit sooner than I expected, which means that I believe the United States will follow the same path even sooner than expectations. And what that is the Bank of England has capitulated on tightening monetary policy. And this is a big deal. Inflation is even worse in England and the United Kingdom than it is in the United States. And in the face of this horrible inflation, they have decided they are not going to fight inflation. And the reason for this is a real problem. It's the pensions. So people that are collecting pensions, mostly from government pensions, but also from other private pensions as well, what they're doing is they're paying out all their pensioners. And unfortunately, with the low interest rates that have been going on in the fixed income market for the last few years, these pension funds decided that in order to pay all the people their payments, they decided that it would be a good idea to borrow a bunch of money at these low interest rates and reinvest that money into longer term maturity bonds and stocks and different things. And this looked really good for a short time while rates were very low. But unfortunately, this was a really bad idea, because now the interest due on all those loans has skyrocketed up with the higher rates, and all of the investments, the long maturity bonds, the stocks, the things in these pensions have collapsed in value. So now they're in a real bad spot where it looks like there may be possibly a bankruptcy. So the Bank of England actually had to come in and to protect the pensioners. And this is a real problem. And it's interesting. There was a book that was put out not too long ago by a famous author, Robert Kiyosaki, and it was called Who Stole My Pension? And it's all about this problem that's developing around the world, but also here in the United States. And of course, we face some of these same problems here. Here in California, we have CalPERS, and so these pension funds are a real potential problem. Now, of course, the right thing to do in this kind of environment would be for the funds to say, look, we can't pay the income that we promised because the underlying investments are not producing the kind of returns that we projected. So we have to cut people's payments, but that's not what's going to happen. They're going to continue to make payments, and they're going to bail these funds out, and that is extremely inflationary. So my expectation is when the United States changes monetary policy in order to save the pensions and basically the same path that England is dealing with right now, what's going to happen is all of the stock positions, the inflation hedges, the precious metals, it's going to take off. We're going to make some great returns. So at this point, we're very defensive. And what we want to do is position. We're kind of like we're playing chicken with the currency markets. We're heading straight on. We can see the headlights, and I'm going to hope and try my best to swerve and get you out of cash and into the stock market at the right time. Now, as I mentioned in several previous videos this year, my target on the S&P 500 is 3,500. We are getting very close to that target. I look today, we're in the 3,650 range, so we're really close to hitting those targets, which means that we're going to be getting aggressive. We're going to be taking that cash that's on the sidelines, the hedges we have in place, and we're going to be buying stock while it's cheap in the market. So when the market recovers, we end up making some great returns. So we're working really hard. I'm watching the markets very closely. We're going to make some of those changes very soon. Obviously, if you have any questions about this, please reach out. Be happy to chat with you further. But this is what we're watching in the markets. And I think that development yesterday with the Bank of England capitulating in their quantitative tightening. It's just, this is the canary in the coal mine. So this is what's going to spread throughout the whole world, and of course over here to the United States. So that's what we're looking out for. And if you have any questions on your accounts, feel free to give us a call. But we're at a point where we will be making some moves to get more aggressive and buy stock shortly. So thank you for watching. Hope that's a good market update and gets you up to speed on what our thoughts are.